Today we are going to be interviewing David Morgan from the Morgan Report. Hello, David. Thank you for being on the show.
Alexander, it's good to be with you. Thanks.
Okay, great. So can you tell the viewers a little bit about yourself?
Yeah, I can try to be brief. Lived on the planet almost 70 years. I was very interested in finance and money from a very early age. I had a pretty interesting and well-established aircraft career from the time I graduated college, but my heart was really always in finance. I moved into that field, 20 something, almost 30 years ago. Worked for a certified financial planner for a while. I didn't really like that situation because I realized that a lot of the products that the CFPs have are basically pushed on the public. There's not a lot of free market thinking in a lot of that. I'm not trying to abuse anybody that's in that field. I'm just saying what my experience was. So I basically broke out on my own. I traded for a living. I did that successfully, but also worked for a coin dealer for a very brief time. And I basically started in on the Morgan Report, like over in really in 1999, 98, 99. And I had the domain and started doing research. And then I had someone that basically called me up and said, hey, I'd like to buy your newsletter. And it kind of started the business I'm in now, which is really where my heart was. I really wanted to be in the financial newsletter business, and I've been there successfully for some time now. So hopefully that's enough info. My master's is in finance. I'm an Austrian adherent pretty much. I believe in the von Mises school, pretty much down the line. There might be a little variance here and there. Anti-Keynesian, you might say, free market thinker. I think that pretty much sums it up.
Okay, that's great. So what are your thoughts on precious metals?
Well, my thoughts are you need them, especially in an environment like we're facing today, but you don't need to overdo it. Like a good soup or a good meal, you have to season it properly. You really don't want to put too much salt. You can ruin it. So the right amount isn't the same for everyone, but generally speaking, rule of thumb, 10 to 20% is probably adequate. You don't really need to go overboard. I am, and some of my friends are, and many of the premium members of the Morgan Report are, but they pretty much understand the risk involved with being overweighted in a certain asset class. But generally, if we had enough financial awareness that the average investor understood how imperative it is to have a weighting in the precious metals, those metals prices would be far, far higher than they are right now. Because right now there's about a 1% exposure into the metals, and we should have probably a 10%, which means a tenfold increase in the amount of people that are investors that need to have 5, 10, 15% allocated to that asset class.
So why do you think banks are hoarding so much gold and silver, such as JP Morgan, which owns the most gold in the world and the most silver?
Well, one is on the gold side, it's pretty easy. I mean, the central bankers know that gold is the money of last resort. They know it's the only monetary asset really that has no counterparty risk. They also know, at least some of them, that if the reset has to take place on the terms of basically convincing the public to have confidence in their system, gold could be the asset of last resort. In other words, if they established a central bank digital currency and people were really, really resistive to it, they might have to come up and tie it into gold by some measure, 40% backed by gold or whatever. So the banks really know how important gold is for the monetary system. As far as silver is concerned, silver has been taken to the woodshed way back in 1873 as being a non-monetary asset. And since I know you probably have a younger viewing audience than me, I would encourage people to look up The Secret of Oz, a film by Bill Still, Still. The Secret of Oz is about what really the Wizard of Oz is all about. And it's all about the Eastern banking establishment going on a gold-only standard and basically taking it to the people at large, or the people's money. out of the monetary classification so that the banks would have more control. So I digress to come back. The banks don't look at silver as money. The reason JP Morgan has such a lion's share is because they are the custodian for almost all of the paper silver that's partially backed by physical. So your SLV, which is the largest ETF, is has JP Morgan as the custodian. Most of the silver's in London on these ETPs, ETFs, and most of them are held by JP Morgan as let's say the main custodian. There are authorized participants that are listed, and there are several ETPs, exchange traded products available, but almost all of these have a fundamental flaw in them that really you have got exposure to the price of silver, and that's all. And even the sub-custodians, they're basically not liable for anything. I mean, I could dive deeper in there if you want, but you can just take it at that and say, well, I don't believe a word you're saying, David, and that's fine. Don't. Just look up the prospectus for yourself and read it out loud, and you will have a very good understanding of what the exposure is for JP Morgan and what their liability is. They don't have any.
Could you dive deeper on that?
Yeah, sure.
I'd like to hear more.
All right. Well, excuse me, everybody, for my age and my reading glasses, but we just put this in the latest issue of the Morgan Report, our premium, which is our paid service. So I'll read a little bit here. I'll give you the general idea. So this is a direct quote. So quoting from the prospectus, and this is for the SLV only, so you could apply this to most of the other ones. The silver bullion custody operations of the custodian are not subject to specific governmental regulatory supervision.
Wow.
The custodian is responsible for the safekeeping of the trust silver bullion and also facilitates the transfer of silver bullion into and out of the trust. Although the custodian is a market maker, clear and approved weight under the rules of the LBMA is not an official or governmental regulatory body. Furthermore, although the custodian is generally regulated in the United Kingdom by Prudential 13 Regulatory Authority and the Financial Conduct Authority, such regulations do not directly cover the custodian silver bullion. Accordingly, the trust is dependent on the custodian to comply with best practices of the LBMA and to implement satisfactory internal controls for its silver bullion custody operations in order to keep the trust silver bullion secure, end quote. So here's what we added commentary to that long quote I just read. It's rare to find any investment product that is not regulated in today's environment. Instead, investors in the SLV are putting their faith into the custodian, JP Morgan, for the safekeeping and transfer of bullion into and out of the trust. If I wanted to manipulate the silver price and I were JP Morgan, I'd lease a great deal of the silver and run a fractional reserve system. This way, it gives the illusion that the perceived supply is larger than it actually is. Investors are supposed to trust JP Morgan to comply with best practices and implement internal controls.
Wow.
Excuse me, I'll get on the next page. I'm almost done. Internal controls of the bullion it holds. It is a conflict of interest for a bank that is a custodian of a commodity to commit price manipulation of that commodity. And JP Morgan has admitted doing that. Why should investors or anyone else trust them? So that's it. A lot more to that section of the Morgan Report. I won't read it. I think that's sufficient. But again, you don't have to believe a word I read, even though I quoted it directly. You can go in and do your own research. And I think, if there were enough people that own SLV as their primary silver investment, I'm talking retail investors. I'm talking people that have, 100 shares or 50 shares or 10 shares or 1,000 shares. Sold that SLV, that stock, because that's all it is. It's a stock certificate. That's what you get. And in fact, you don't really have access to the stock certificate, but that's another story. If they sold their shares took the cash and called up the coin dealer and had some patience. And depends where you are in the world. If you're in, the East, like in Asia, and used Bullion Star, for example, you probably get a faster delivery than if you're sitting in Australia or North America right now. Nonetheless, you buy from a reputable dealer and have some patience, like 4 weeks, 6 weeks, maybe 8, but more like 4 or 6, and take delivery of whatever the equivalent is in physical silver versus the SLV shares you once held. That alone, I think it puts more pressure on the market.
Yeah, definitely. So basically, what you're saying is that JP Morgan is not liable, has any regulations on what it can do with the paper silver market. So it's basically kind of what the Federal Reserve is doing with the US dollar, how they're able to devalue it or value it higher at a whim, basically.
That's it. I mean, if you want to get a little more in depth on it, and I'm not here to be a book salesman, I really don't make any money on the book, but in the book, The Silver Manifesto, that I wrote with Chris Marchese, we go into fractional reserve bullion banking and how it works. I also just did an interview with Nick Barishev of BMG Group of Canada, that you can look up on my blog. And Nick goes through it in great detail on how these ETFs are set up for the most part. So there's a lot of, for lack of a better word, shenanigans that go on that's legal. I mean, if you read the prospectus, as you just said, I'm repeating back to you, Alexander, there is no real liability on the part of JP Morgan. In other words, if one day they said, you know what, we can't find the silver, it disappeared overnight, they would have there'd be no recourse by the investors at all. If that doesn't scare you, I don't know what is. In other words, when they say there's counterparty risk in, in a lot of things, in a stock, and, someone holds title to your house or whatever. But when the counterparty that you have some risk with has no liability, that's actually setting up for the worst case. Let me be fair here, where you can steal for somebody and not pay for the consequences. Now, I'm not saying that's what they're doing. In fact, I do believe that there are physical silver backing the SLV. The bar numbers are displayed. What we don't know is how much of that is hypothecated, rehypothecated, and rehypothecated. In other words, again, going back to my interview with BMG Group, Nick Barishev, he insists that a lot of that silver is leased. What I just read to you from my report, we imply that some of it probably is leased. And we also, the main point, whether it's leased or not, is rather secondary. The primary thing is, what is the responsibility for failure? And the answer is, or the failure to have the silver, produce the silver. And the answer is, there isn't any.
Wow. So when you're saying that, what I noticed with the government in the United States, they seem to tax and regulate everything. The government wants to be able to get money from everything. So if they're not regulating these banks with their silver, that means the government must be in on this with the banks. Do you think that's a correct assessment?
Well, personally, yeah. I mean, will I say it publicly? I just did. Can I prove it? No. It's my opinion that you're correct. But, those are real tough hurdles to overcome, because the legal language and the edifice that's put up by the main authorities, primarily the US government, are so substantive and so powerful that most people absolutely will take their word for it, no matter who is on the other side. So, I'm not afraid to speak the truth. I don't know the absolute truth in this case. What I do know is that you're having a real tough battle, even if you're correct, to be able to have standing, to be able to prove it. Nonetheless, I think I've proven enough to where someone that owns the SLV should question it. Now, I want to be fair. If you want to use the SLV as a hedging vehicle or a way to, let's say, lock in a profit synthetically because you own physical or whatever, I'm really not against that. I'm really not against if you buy the SLV. But if you do, and that is your primary silver investment, I would say absolutely rethink it. If you use it as a trading mechanism, a hedge vehicle, or some way to park money temporarily, I don't really have much of an issue with that. But again, it's up to the individual investor. I just want them to be aware, because a lot of them see, JP Morgan as a custodian, they see, how many shares are traded. It's the biggest one. They see the bar numbers. And from all appearances, at a cursory level, it looks really good and it's very convenient. But convenience does not necessitate why you are buying physical metal. You're buying it because it is the money of last resort. And if that is the case or your primary purpose, then you darn well better have it where you can hold it.
Yeah, I definitely agree with that. And it seems to me that the government would just do what it has done before with the SLV. They would probably close the physical exchange where you couldn't get any of your silver if there was really a run on the bank to get their silver. They would just close the exchange. Do you think they would do that? Just close?
Well, first of all, in the SLV, there isn't anybody that can get the silver except for an authorized participant, and the APs are all other banks, basically. There's some carrier services like a Loomis or whatever. I forget which ones are APs for the SLV. I'd have to look it up, but no real individual investor. I mean, there could be one, but it'd be very difficult. So the way it's set up, it's a big paper chase, in my view, a fractional reserve silver situation, as we mentioned. So, yeah, I think if the run on silver, let's say hypothetically or in a real case, takes place, then the protections are all on the side of the ETPs, the exchange traded products. So the SLV has no liability. Sorry, we are out of silver. Sorry, we sold it. Sorry, we leased it. Can't get it back. We're sorry, but here's your shares. Cash them in. Well, what are they worth? Well, we don't know. So I agree that it could take place. And it's worrisome to me that, some people aren't aware of the facts. I mean, I think a lot of people don't take the time to read the prospectus, and some may read it and not understand it. And again, I'm free market. If you think that's the best suited silver investment for you personally, because you live in an apartment and all you want is exposure to the silver price, and you trust the banking establishment and you're convinced, I'm not going to change your mind. If someone has that kind of thinking about it, then go for it.
So why do you think the bankers are manipulating the price of gold and silver to bring the price in dollars down?
Well, this argument or this hypothesis or some call it conspiracy has to do with a number of things. But if you just talk gold only, gold is kind of the anti-dollar. I mean, the bankers really want to continue to have a monopoly on the quote unquote currency supply. I could say money supply, but really that'd be inaccurate. So they want to control the amount of currency in circulation by various means. Gold is a barometer that shows the savvy people, the investors that really know how the monetary system works. It's a warning signal. And if gold is allowed to establish a free market price, it would probably be north of 5,000 US Federal Reserve notes per ounce, which, depending on how quickly it got there, would put up a lot of red flags for the entire investment markets. It could cause a reaction in the general equity market, the bond market, and the foreign currency markets. So it's really to the advantage of the banking elites to keep gold under pressure and not rise too fast. I mean, if they had complete control, then gold will still be at 252 an ounce where it was in the year 2000. It's not. It's substantially higher than that. My thesis is that the banks really can't control the major trend, which is up. But within that major trend, they can certainly make it extremely difficult to get to where it really belongs. In other words, they could keep a lot of pressure on it through the paper paradigm that predominates not only the settlement of the price, but also the liquidity of it, because most that invest in gold are investing in a paper product, not in the physical itself.
Right, you're definitely right on that. So we see banks like JP Morgan and others, they are the biggest buyers of gold and silver in the world. other than maybe countries. So, do you think these banks are manipulating the price of gold and silver downward so they can buy more physical gold and silver to put into their vaults?
Well, that's probably bordering on conspiracy theory, according to some analysts, but certainly you have to hold that idea and think about it. And I think the main purpose, as I said or tried to convey earlier, is just to make sure it doesn't rise too fast and catch the public's attention. Whether they want to own more or not remains to be determined. I think there's enough in the vaults of the central banks that all they have to do is reprice it properly to basically keep a hold on the financial system, or let's say the monetary system as required, because I don't think they really want to use gold to back any of the reset currency markets. But as I said earlier, they may have to. So they probably have enough. Do they want more? Perhaps. But I don't think that's the primary thing. What I will say is that we went through a great study in the Silver Manifesto I mentioned earlier on manipulation. And if you really want to study it, you could read that chapter and come to your own conclusion. We use a lot of data. A lot of it was based on the closing price in London and the closing price in New York and what the anomalies were. And it's statistically absolutely 100% impossible to have a market act in the way that it has over years and be a random walk. It can't be a free market. It has to be manipulated.
Yeah, that definitely makes sense. So, what do you think of this quote by JP Morgan? I'm just going to read it really quick to see what you think about it. So, he says here, quote, "Gold is money, everything else is credit. And once you realize this, you'll never be poor again." JP Morgan. What do you think of this quote?
Well, I think it's partially true. I mean, as it stands, it's probably true, but he claims that gold is only money. And this again goes back to the crime of 1873. Silver has been used as money more places, more often, more transactions than anything else, by far more than gold. Secondly, the word silver and the word money is synonymous in all the Latin-based languages. So really the best study on the history of money will show you that the gold standard almost always fails, and it's not gold's fault, although some people like to say that, oh, gold doesn't work. Well, gold is an inert element on the periodic table that's cherished for its beauty, its durability, its fungibility, and has been considered by vote of the people to be money. But so is silver. And a bimetallic standard is the one that actually works the best. And the only way that you can really price gold is in terms of silver. Once you have a gold only standard, then you can price gold to its proper amount, which is infinity. And the reason it's infinity in theory is because you can print enough money, or let me say currency. You can print enough currency to where the currency is absolutely worthless. If you look at Venezuela now, you look at Zimbabwe, you look at Argentina a couple times, there's been many instances in our lifetime where the printing presses went mad and the value of precious metals were almost indeterminable in terms of zeros. And I don't think the US is facing that, but we are going to get to a point where we're pushing that direction. The trend is moving that direction. And as long as there's enough demand in these metals, there will come a time at least from history's perspective, there will come a time where they cannot hold back the floodgates. They may manage it. They may try to put up edicts. They may declare certain things, but there's no fever like gold fever. And once that takes hold and people realize that that's money and silver's money and everything else is credit, and the credit, the other side of it is debt, and the debt bomb is failing. You cannot cure a debt problem with more debt. What are we stimulating? What we're stimulating is our destruction of the currency. That's what they're stimulating. I'm not saying we shouldn't give checks to people that need them or deserve them. That's not my point. My point is every time they do that, they're destroying the currency. And at some point, the public will wake up. The currency destruction isn't a function of how much funny money's printed. It's a function of the psychology of the market. It's when people refuse to accept it, or when they do get it, they spend it as fast as possible because they know the next time they get a stimulus check, it's going to buy a lot less, even though it might be twice the amount. Let's just take a visit there. So it's what's coming out now, 1,400 per person, I think it is, or 19, I don't know, 1,400. And that gets people through, another month or two or whatever. And the next one, let's say, is 2,800, but it buys less than 1,400. Now that's a bit of a stretch, but I want people to understand the trend of a currency destruction. And the final phases of a currency crisis, which we are now in, you see an acceleration to the deterioration of the fiat system. And that's what we are encountering right now.
Yeah, I think you're definitely right. I think the only reason why our currency hasn't inflated more than it already has, and it already has inflated quite a bit from like 1950 levels, for instance, but I think the main reason why it hasn't inflated too much, like astronomically, is because they give most of this like stimulus money and like other money to like big corporations, like their friends, so they can use all that money themselves, and then they just inject the money into like the one corporation, then everybody else gets pennies basically. And that way they're still like one person's rich and everybody else is kind of poor compared to that. What do you think about that?
Well, I think it's true, and I think there's a little subset to that that isn't talked about very much. I mean, if you look at the corporate debt market, the corporate bonds, a lot of these corporations are zombies. They really should be out of business. So when they get this big stimulus and the people get a little pittance of it, they can take that free money, basically. I'll call it free money because that's really what it is, and make their balance sheet look better. So XYZ Corp is 250 million in debt, and they have no real chance of paying it off on their cash flow or their prospects going forward. Well, they get an injection of 50 million. They only owe the bank 25 million, 25 billion. Anyway, choose your numbers. You get the idea. So they take the 25 billion, they pay the bank what they owe them in arrears or to keep their current debt, their corporate bond in clean and healthy, so to speak, and maybe have another 25 billion to play with, and maybe do some more advertising or whatever. So there's a lot of this gamemanship that goes on behind the scenes that most people don't really articulate and explain to people. But again, you can't solve a debt problem with more debt, and the people that get it first. I mean, it's a good old boys club, like George Carlin talks about in his diatribe about the way the financial system works, and he says it's one big club and you're not in it, and he's right.
Yeah, because basically the people who get this astronomical amount of money first, they're going to be able the one who can really spend it. But then once it starts like getting to like the average day person, all this money, the money starts becoming worthless. So the big corporations have their time to spend it, do whatever they want for whatever goods and services they want. And then once it gets flowed down to the people, the money becomes more and more worthless. So I think you're definitely right on what you're saying there about the whole currency and all that. So what do you think of the Federal Reserve?
Well, it's not federal, it's not reserve. I mean, there's basically, it's basically a central bank of the United States. It's the most powerful entity globally outside of a few superior banks. The Bank of International Settlements would be on top of it, and the IMF probably as well. But it is the extreme, it's the major central bank of the world. I think that they are scared to death. I think that they have one operation they can do, and that's print more or create more debt. And the way the debt comes into creation is that the US government borrows it. It really, we often say the government's printing money, but the fact is the government's borrowing money. And the amount of printing that goes on varies depending on what the bond market looks like, because when the US government borrows from this private corporation called the Federal Reserve, that is usually in the bond market, which is long-term paper or short-term like T-bills, but it's like 2-year, 5-year, 7-year paper, 10-year paper. And that isn't really cash until those bonds are taken to the market and cashed in. So when, let's say, China decides they've had enough of the 10 years, and they cash them in, they do get cash. When they sell them in the market, they are paid in cash. So it's an ebb and flow. It's a way to control the money supply. It's sort of banking 101 of how the bankers control the money supply, and they're pretty good at it. But if they keep increasing the amount of debt, they are at the same time eventually increasing the amount of money supply that exists, and it's going to bite them at some point. And right now, the bond market is starting to have a tail, T-A-L-E, that, or tell is probably a better word, a tell that we are facing a potential disruption in the debt markets, which of course is the most important part of the whole financial system. The bond market is to the financial system what oil is to the global economy. It's the most important part of it, and few people understand how critical it is and what it means if there is a bond market, I won't say failure, but restructuring, or we have to actually see the market reprice the future value of money to something that's more appropriate than it is right now.
Okay, so getting on to a different subject a little bit. So, what are your thoughts on cryptocurrencies?
I'm neutral to somewhat positive. We've put a couple in the last issue or two of the Morgan Report. We've been studying for some time. We've been writing about it for well over 2 years. I do think it's the push. I'm certain, in fact, what I've written, I write the editorials, so I don't have a ghostwriter or anything, that the central bank digital currency is the push. Remember, the whole DeFi thing is decentralized finance. That's what DeFi stands for. This is what the people want. This is what we need. But the CBDC is the exact opposite. It's central bank digital currency. So it's centralized, not decentralized. But I do think it's the push. I think it's probably the future. I think a lot of people will be forced into it. And the competing decentralized cryptos will have a place, but they'll be put to the side, in my view. I wrote about this a few months back, where let's take the most popular one, Bitcoin. Will Bitcoin go away? I doubt it. Will it be a viable part of the market? Yes. Will it be viable in all circumstances? I doubt it. I've done this in other interviews, so if you heard my other interviews, you can fast forward. But I think what will take place is once the central bank digital currencies are issued, that there will be restrictions on the Bitcoin alternatives, meaning you can't get a mortgage with Bitcoin. You might be able to buy a house with it, peer to peer, but you wouldn't be able to do any government controlled purchases such as a mortgage, an automobile loan, a school loan, a small business loan, any real estate transaction, that kind of thing would have to be done in the centralized digital currency, not a decentralized digital currency. So that would put Bitcoin in kind of a second position to the central bank's monopoly on money or monopoly on control. You couldn't get, for example, something that's, could be a very high bill, especially in Texas, and I'm not trying to be funny, but utilities. Like no matter how much Bitcoin you have, you can't get your utilities hooked up on your business or your residence without having the central bank digital currency. So that's what I see happening. Could be wrong. I've thought it through fairly deeply. That's my conclusion so far. If I'm wrong, I'll admit it, move on with new data. But that's what I'm seeing right now.
So we see on, at least I see, looking at a chart of the biggest owners of Bitcoin. The biggest owner of Bitcoin by far is Satoshi Nakamoto from the chart. I think he owns over 1 million Bitcoin. He's the biggest owner of Bitcoin. And he is anonymous, so we don't know exactly who he is. So that brings me to my next question. Who made Bitcoin? The anonymous Japanese Satoshi Nakamoto or the United States government?
Well, if you go to my article, my 2 bits about Bitcoin, let me see if I can pull it up and read you the bottom. All right, my 2 bits about Bitcoin, David Morgan. I now have it. My computer's acting pretty fast today. So if you scroll down to the very bottom of the article, I wrote this. Finally, in an effort to research the topic, we contacted Richard Grove of www.tragedyandhope.com. Richard provided documentation that the National Security Agency was the first to explore this idea. Does that mean that the NSA is ultimately behind Bitcoin? I question that. I don't know. Of course not, but it does give one pause to reflect, does it not? Looking at what has taken place, especially over the last year or so, but this article is like 7 years old, I must conclude with this simple and, to my thinking, self-evident statement. Whereas Bitcoin can vanish, gold cannot. Just remember, for all that read this, the Thomas advice of buyer beware, let the free market reign. So basically said, who am I to say what Bitcoin is good or bad? Let the free market determine if it's good or bad or how much it's worth or any of that stuff. But I was tipped off by a researcher that's excellent, Charles Savoy, and he sent me some information about how the NSA types were involved with the implementation of it. We know In-Q-Tel, which is the investment arm of the CIA, had early money in Bitcoin. So I'm suspicious about it. And also, and I'm not a coder, someone a lot smarter than me on coding, like Cliff High could enlighten you more than me. But still, just common sense logic tells me that for one person to write code that good is a really daunting task. It's more likely that it would be a Satoshi Sakamoto's rather than an individual. And that goes right back to like an NSA or a CIA or some combination thereof, where you have a top tier programming force that can run it, rerun it, get the bugs out of it, run it again, get more bugs out of it, and run it 400th and 12th time and say, yep, that's it. Now, that's all conjecture and pure speculation on my part. But to, again, think one person would be capable of doing it, I wouldn't rule it out, but it's highly unlikely in my view.
Right, I agree with you. Usually, when something is anonymous and is really mainstream, like Bitcoin is, like with the media promoting it, it's usually the government. That's at least what I've seen in a lot of
Well,
stuff.
the other thing about Bitcoin that most people don't even talk about is 65% of the mining is done by China.
Right.
And the biggest holders of Bitcoin outside of China, like Iran and a few other ones, hold another, I think it's 14%. So 65, 70, about 80% of the Bitcoin is held in countries that are favorable to China. And maybe only 15% are favorable to the US. So
Yeah.
what does that tell you? I mean, people, I won't say it. I'll just stick with that.
Yeah.
But I'm not a big proponent of it. I think the blockchain hashtag system's here to stay. I think it's like anything. I mean, money is the root of all evil. Well, it's the love of money that's the root of all evil. Money's just it's something that can be either one. And I think the blockchain is the same way. But I still am suspicious. I think I've said it enough. I'm sure I'll get the hate mail. Don't bother. You can read my article, my 2 bits about Bitcoin. I'm not saying good or bad. I'm saying let the market decide. The market's priced it at what, 55,000 USD right now. So there, you guys, you Bitcoin lovers, you got your proof right there. I'm not going to argue with that.
Yeah, one thing I was actually looking at that I thought was pretty interesting, I was talking to another guy about it, was that the Bitcoin market cap is around $1 trillion now,
Right.
and silver's 1.5 trillion, but the majority of all the silver is owned by banks, though. It's not owned by, real people like you and I.
Yeah.
So that just tells me that Bitcoin is probably owned mostly by banks or countries, like you were saying.
Well, I want to correct you on what the silver market cap is, because that assumes every atom of silver that exists in the universe coming from planet Earth is a part of the silver market, and it's not. The silver market's about 1 billion ounces a year, which at today's price would be 28 billion. And we've got about a 4-year supply, which would be 100 billion. So double that to 200 billion. It's not even close to 1 trillion. You can make it 500 billion. But the idea, and I know that's out there. I mean, it's a lot of. I think it's a mind game that there's that much silver out there. I mean, if you listen to some of the establishment people, they'll tell you there's that much
Well,
silver.
there,
Yeah,
that's
there's that
probably
many silver atoms, but
yeah,
that
you're
doesn't
right.
mean there's
You're
silver.
right. That's probably adding, the paper silver market too. When
Well,
they
the silver market and statues and silverware and silver jewelry and religious objects that'll probably never be melted down. There was a study done by Charles Rivers Associates in the early 90s, and they went through this silver market and how much of that non-silver silver, meaning not commercial bar form silver, would come back into the market with a huge run-up in price. And their conclusion is not that much. First of all, so much did come in 1980 that was melted down. Secondly, the refining capacity of the planet is basically incapable of producing what we need now. So, and part of it's due to the illness, I admit that. But, Republic Metals got shut down. They're a pretty big refiner. So, there's all this silver out there that isn't silver. What do I mean? Let me be specific. The silver jewelry, the silver artwork, the silver religious items, the silverware, all of that is silver. I don't
yeah,
deny it. What I'm saying is that is not commercial bar form, and commercial bar form is the only form that determines the price of silver. So again, going back to 1 billion ounces a year, we have that much mined every year, and we have some of it moving into the above ground stores, and we've had that since 2006. So we're sitting at maybe make up a number. Well, I won't make it up. I'll be specific. It's probably 4 or 5 billion ounces. So say 4 billion times 25. Again, you're at what, 100 billion, 200 billion, 300 billion ounce or dollars. Nowhere close to $1 trillion in silver. Not even close. Again, if you count and throw the jewelry and silverware in there, yeah, you can, but that isn't silver. So I know I've said it twice, but it really upsets me because it's a way to obfuscate the market. It's a way to make the general public think, oh my God, there's trillions of dollars.
yeah, you're right because you raised a good point because I have looked into a lot of the silver is in the landfills also from electronics and stuff like
Right.
that.
Yes.
So you can't really use it. And
Right.
it does make sense that the media would try to say that there's more silver than there really is to distract people from it, like you're saying. So that actually brings me to my next question. Why do you think the media is promoting Bitcoin so much and basically talking nothing about silver and gold?
Well, I think there's multiple reasons. I mean, to question the intent of something is really difficult, but I'll give it a stab. One would be to distract from the precious metals, but I think that's second or tertiary. It's, second, third, fourth down the list. I think it's typical Wall Street behavior. It's greed. I mean, once Wall Street, I wrote about this in the Morgan report. Once Wall Street gets behind something, look out. And they have gotten behind Bitcoin. So it could be a pump and dump operation by them. You got some big names coming into Bitcoin that are well known, and someone that might have been thinking about gold a couple months ago sees that Elon Musk buys 1.5 billion in Bitcoin. Oh, Martha, we're not buying gold. We're buying the new gold. We're buying Bitcoin. Elon Musk bought it. He knows what he's doing.
Right.
So part of it's that. I mean, I don't want to make a big case. The truth is, I don't know. What I do know, Wall Street's behind it or pushing it hard. Whether they're going to push it to the point of where, they make the Chinese rich. Remember, China had mined 65% of it. And remember, there's like 15%, I think, of the nation states friendly to China that own a lot of it. So you're looking at like 80% of the market is held by, CCP types. So, buyer beware. I mean, look, I'm free market. You want to buy Bitcoin, knock your socks off. You want to put all your assets in Bitcoin, do it. I would ever recommend that. But, to each their own. But, it probably looked good at, when it was, you could mine it yourself, when it was in under 10, was under 100, under 1,000. Probably 3,000 was the last time to buy it with some assurance that you're buying relatively low to the ultimate price, whether it's going to 55,000, 155,000, 250,000, a million, like some people say. I don't know. What I do know is a lot of the power that China uses to mine Bitcoin is under the Three Gorges Dam, and that dam is having extreme problems right now. So as a thought experiment, what would happen if that cheap electricity were no longer available due to a structural failure with part of that dam? What would happen to the Bitcoin mining then?
First of all, I think it would definitely make that part of China that people wouldn't be able to use their Bitcoin anymore because there'd be no electricity.
Yeah.
Yeah, you raise a really good point. So, what do you think of copper?
Neutral to positive. I mean, copper, they call it Dr. Copper. It is a pretty good indication of industrial demand or true growth in the global economic system. But I discount it because it is a metal and it could be stored. But it's, if you think silver is bulky, try storing copper with any real value. Nonetheless, I think oil is a better indicator, and oil prices have gone up, and there's pretty much a very, very likely scenario where the oil price will continue to climb even under the duress that we have from the illness, because it is the most important substance on the planet energy wise, and the energy cliff is just ahead, which means that all of these periphery type of energy substitutes are not as viable as they're purported to be. Fracking, as an example, solar, wind, geothermal, hydrogen, a lot of these things, although they do produce energy, are looked at through green glasses. And you can look at them through green glasses all that you want, but if you have a strong engineering background or a good financial background or both, and I'm not necessarily talking about myself, I'm talking about anyone that can objectively look at the truth, you'll find that those solar panels that are good for 20 or 25 years really don't break down very well when you put them in the landfill. And you also find how many toxic materials are used to make them. You also educate yourself on how much fossil fuels are used to build one. And when you do what's called a break-even analysis, which is basic in finance, you'll find out that the break-even analysis on energy return on energy invested isn't all that sweet, even though it's gotten better over the years because they've done what's called squeeze the silver out of the product as much as possible. And this is very much a good thing. You want to get the highest efficiency out of any product for the least amount of cost or least amount of raw material. And I think silver has reached its limit, at least temporarily, for the amount of silver per kilowatt hour that you can achieve, at least again for a while.
Yeah, I definitely think you're right on silver. And one thing I was looking at on copper was in the last 250 years, there was a chart I was looking at. It was called long charts or something. And basically, the copper to gold ratio, copper is at like the lowest of the low ever in 250 years. And one thing I was looking at, like say in 1900, when they had Morgan silver dollars and stuff like that, it used to be for every 100 copper pennies to one silver dollar, and now it's pounds and pounds of copper to make one to go to the value of one silver dollar. So, do you think they're devaluing copper?
Well, Alexander, I've thought about this, and this is just a thought, and I have not done the math on it, so I hope I don't get criticized too much. But I've been thinking about, what I think about all the time, the economy, money, finance, and all that. But I think, and I don't know, that there's probably enough iron ore, copper, um, above ground right now that if we had an efficient way to recycle the bulk of it, the lion's share of it, that we might not have to do much more mining, especially with substitute materials. I mean, look at um, how much less metal is put in today's automobile versus what was built in 1950, which was a big, massive rolling, steel and chrome and a lot of metal. I mean, it was just a big metal thing with a big metal engine rolling down the road on rubber tires. That is significantly different today. So I may be wrong. I haven't looked at the math again, but I do want to state that we, the human race, are very wasteful. And if we could take more thoughtfulness toward what we already have mined and reuse it, we would probably be much better off. There is some, obviously, I mean, I'm well aware of, wrecking yards and that type of thing and looking at what happens in iron ore. And there is some that's, recycled, but I think it'd be a much better job, a lot more efficient. I think a lot more energy effective. And I think that's really the direction we might be thinking rather than, you know, issue more debt to dig more copper to not use it as judiciously as we can. You could say it across the board. I mean, you could say it about aluminum, you could say it about tin, you say it about most of these metals. We're very wasteful in the way that we use them.
Yeah, even silver too, because we have a lot of electronics in the landfills, and they're not really recycling those at all. They're just leaving those basically to rot in the ground. So that brings me to another thing that I was just looking at. So they were talking about the United States government was talking about getting rid of pennies, and one things and some of the things they've been doing pre 1982 pennies are copper, and then they replaced them to zinc, and now they're talking about getting rid of pennies altogether. So why do you think that? Why do you think the United States doesn't want to use any sort of metal in their coins anymore?
Well, because they lose, because it's inefficient. I mean, a copper penny was worth 3 cents at the time. Nickels, I mean, at one time, I don't know what the nickel price is. I could look it up. But nickels were much more valuable as the melt value than what the face value was. So they wanted nickels out of circulation as well. And this just happens at the end of great inflations. It's what happens at the end of a great currency crisis. It's not unusual. It's kind of the Roman Empire in slow motion. It was a denarius that was basically pretty close to pure silver. And then at the end of the Roman Empire, before the big failure, it was basically a copper coin that was washed in silver. So, same thing here. I mean, if it costs 3 cents to issue a penny, then let's do it in plastic or eliminate it. And I got to tell you a quick story, and we probably should wrap up on. I mean, I enjoyed the conversation, but I've only got so much time. We've gone almost an hour, but I've enjoyed it. But back when I was a kid, still thinking about money, we lived in San Diego, so we take a trip into Mexico, primarily Tijuana. And I remember looking at the storekeepers and noticed there were these little bowls out there of coins. They were pesos. And my instinct was, wow, isn't it sad that their currency is so devalued, that their pennies are worth so little, that they put them out on display so that when you pay for something, you can just grab what's required to make the exact payment and they just offer them basically there for the taking. Well, we've had that in the United States for quite some time. And it's just, again, a very, in your face uh, indication of how much the currency has been debased. And taking the penny out really, at this stage of the game is probably worth doing it. It saves some money. It's not going to balance the budget. It's really meaningless as far as helping the national debt, but it's almost a burden to carry something as worthless as a penny for a storekeeper or the general public. So I could definitely see them doing away with the penny.
Yeah, definitely. So I just had one more quick
Sure.
question. So do you think cryptocurrency aids in the social credit system?
Yes.
Okay.
Yeah, I think the main thing about crypto, just go and dwell on it a bit longer, is about control. I mean, I really think, and I wrote about this a while back, that it's not about the monetary monopoly or the monetary power, which of course still exists and is part of it. It's more about ultimate control. And that means to be able to trace, track, and tax everything that's done by every individual on the entire planet. And because of that, they might not call it social credit score, or at least the Chinese are honest enough to call it that. But in other countries, it will be. You're buying too much junk food, or you're buying too many sweaters, or you're using too many BTUs in your home to heat it up, or you're driving too many miles, or who knows, but they want to be able to track, trace, and tax everything. And then mandate your behavior based on that. So yes, social credit, absolutely. In fact, you could make the argument that's the main purpose, and that the monetary control is the secondary purpose. But they really go hand in hand, in my view.
Right. So can you tell the viewers where they can find you?
You bet. The best place would be the main website, which is themorganreport.com. It's themorganreport.com. Please get on our opt-in list. Just give us a first name and a valid email. You will be asked to validate that email. It's a double opt-in list. We don't need a bunch of bots or on our server. I own the server. I pay for it. It costs me money to send this stuff out. I gladly do it. But so that's it. Get on that. You'll get interviews like this. I post them, send them out once or twice a week. Also do a weekly podcast. It's usually 50 minutes long. Talks about what's the most fascinating items in the financial system to me personally. I comment on them, and then I usually comment on the precious metals at the end of each podcast.
Okay, that sounds great. So please check out the Morgan Report, everyone. And thank you for being on the show.
Alexander, it's been fun, and I want to compliment you for one, asking me and having such a great interest in the monetary system at your age. You remind me of me in a way. I was just fascinated by the way the system worked at your age and perhaps even younger. And keep up the good fight, keep up the good work, keep speaking the truth. There is nothing more powerful than letting others know what we really face with the money monopoly. We need to get the power back to the people, and we can do it. We just have to vote with our fiat, have to move into precious metals, perhaps cryptos, at least alternative currencies, and start working for ourselves rather than for the banks.
Yeah, I definitely agree. So thank you again, and thank you to the viewers who watched, and God bless.
God bless.